And welcome to Monday, February 26th, starting ahead of the market. So it's before the market opens, it's 8 a.m. Eastern Time, a little after 8 a.m. And we're looking at what's going on. We can see in the market today that right now crude is off about 41 cents, down at crude futures, down at $76.08. And the NASDAQ is off about 10 points. So we have a kind of a mixed set of numbers on the pre-market charts here. Starting off with retail, you've got a little bit of green, mostly green, in fact, and then just a few pieces of red there with Nike. Um, I wouldn't be that focused on retail at the moment. I think retail, there are some opportunities for sure. I don't know if today's the day or this week is the day for those. If we move down to our transport, again, not an area that I'm looking to make any investments in at this point in time. It's more of a wait and see. If you hold it, it's still potentially good holds, but it's not an area that I'd be looking to enter at this point. And then we get into oil, and we're seeing mostly red across the oil stocks here today, and that's likely because crude's down. And some of these had some good days on had a good day on Friday as the market closed. So we should see that these probably take a bit of a dip in the morning, and then depending on what crude does, if crude turns around and comes back up and gets above the 76.49 mark there, then we could see some of the oil stocks turn there as well. So it could provide an interesting buying opportunity in some of the oil stocks in the early morning as the market opens, and then an opportunity to sell those for a small percentage increase as the day goes on. But the opposite is true as well. So we need to kind of just take a look at when the market opens with the individual stocks at 9:30 a.m. Eastern and start to identify kind of what the trends are looking like, what the high at the market open is for the individual stocks, and then where it comes down and what the lows are between 9:30 and 10 a.m. And then you can start to, or at least to 9:45, and then you can start to kind of make a move and a decision and see where you're at. A few stocks that I think have definitely a lot of opportunity to move this week and could be some good plays for some quick wins, but they aren't buy and hold opportunities, in my opinion, at this point in time. The first one is Salesforce. So Salesforce is going to release earnings this week. It's pretty much at a high for the last 12 months, if not an all-time high. I don't know about that, but it's definitely looking at the curve over the last 6 months and even the last year. It's up near $300 at 292.80. These guys have the potential of issuing some good results, and if they do, then it's probably going to bump it up. I'm skeptical with this company because, well, for a number of reasons, but with the price earnings where it is at 110 times, I think it's overvalued. And I'm not sure, based on some of the past earnings announcements where there's been there's been workforce cuts and other expense cuts. I'm not sure if they're going to really meet the market's expectations. So I would kind of sit on the sidelines on this one until earnings are reported. And then the following day, I would look to potentially make a purchase of Salesforce. So I think that this stock has the potential of dipping 10 to 15% if they don't hit earnings expectations or they don't have good forward guidance, particularly if they don't have both of those. So if this drops, it's very likely going to drop at least $10. But so we can see kind of the different movements here and how choppy this stock is already. So it's very likely to come into the 270s. However, if we look at this chart, it's also possible that it gets down into the 250s. So if any one of those two things happen, I think that it will come back quickly, and I think it'll be a good short-term win. It may be a 5-day to 35-day hold, but I think it will have a pretty significant return in that period. So that's one that I'm keeping an eye on, but I'm not buying into right now. The other one that I would consider buying into today, and I'm going to be following this, is Palo Alto Networks. So as we know, they released earnings last week and they dropped off the map. They went from 370 down to the 260s, and now they're up to 280. I think this stock is going to slowly climb back. The decrease of 23% was not fair or justified in many people's opinions. For the results that were issued in the forward outlook. They're going to obviously be doing things in the business to course correct and try to get this back on track. Palo Alto is an extremely strong company. It's a good company. The PE is high. This probably hasn't been corrected for the drop in the stock price. So I think there's some opportunity here, and you can already see pre-market that it's up close to $4 or 1.4%. So this may be one to watch. I wouldn't buy in at 286. I'd see what it's going to do during the day and see what the movements are in that throughout the day, because as you can see here from Friday, it jumped up and then it came back down and then it meandered its way back up, and it just went up and down and up and down. So I think there will be some moves in this, and you can probably get into this in the maybe 282 range, 283 range, and you might have an opportunity to take a percent or two out of this in throughout the course of the day. The other one that's moving up that I'm a big fan of is Cloudflare. And Cloudflare, or NET as the symbol, is trading well. I think in the 98 range. It's a solid purchase, but I think it too will have some volatility throughout the day. And this is one where there's very high likelihood that you can make $1 per share, which is a percent based on where it is at the price point. And I think you've got a lot of opportunity there. So those are a couple of the stocks that I'm looking at today. Others that have a great deal of movement, I'd be very wary of long term, however, are ARM. I think ARM is set for correction at some point. Don't think it's justified at 130, or if it opens at 138. So I think there could be some movement here. Obviously, a great deal of volatility in this. So this is another one that if you're looking for stocks with volatility and upside, that's another one to take a look at. And then as we scroll down through the list, we've got NVIDIA as well. It was making some moves. It was up $6 a few minutes ago. Now it's down $1.35. Obviously, there's a lot of volatility there. Sorry, I was looking at the wrong stock. There's NVIDIA, and it is up $6. And then the other one that I think has a lot of opportunity, and this is long-term opportunity, and 145 is a great price, but if it comes in and opens it in the 144s, if it drops down to 143 or 142, I think Google is a super attractive purchase. I've been in and out of Google last week, buying in the 141 range and exiting in the 144, 145 range, and taking some small profits on that. And this, as you can see from the chart here, had a great deal of volatility on Friday. And then if we look at the weekly chart, again, a great deal of volatility. So just wait, time your purchase, wait for that price to come down to a range that you feel you're comfortable with and in line with where the and not at a top point. So wait for it to kind of bottom out in the price for the day, and then purchase and wait for that to come back up. If we look at the financials, these are things I'm staying away from. So there's definitely some activity here, but I think we are still waiting on a bit of a bomb, ticking time bomb in the commercial mortgage sector. We are going to see TD come out with an announcement this week of their earnings, as all the Canadian banks are. So this could be one that makes some moves this week. Again, I own some TD. I am not putting more money into it at this point. I'm just waiting to see what the announcements are and hoping for some good news at some point, because this stock has been down 20% for the last couple of years. It pays a great dividend. So that's the nice thing about these Canadian banks. If you just want to sit and hold them, it does pay 5% as a dividend, but you have lost money from a capital perspective if you've bought and held this over over the last couple of years. 81 is a pretty attractive entrance point, although it's been in the 70s. So if it does drop down to 79, I do think TD Bank is an attractive long-term buy and hold, and you'll get the 5% dividend on on a quarterly basis, but it's 5% annually. So that's another thing to look at if you're looking for some Canadian stocks, and those banks do announce this week. So that's kind of a wrap for where we are leading into the market open on Monday, February 26th. Good luck with your trading.